And then oil prices, Brent crude and West Texas Intermediate North American grade 79.64, Brent crude 83.64. We're seeing oil at highs not seen since the middle of April. So let's get into the headlines today. We're joined by Efosa Aluyi, who is the head of investments at Sankore Global Investments. Efosa, good morning to you. Thanks for joining us.
Good morning. Thanks for having me, Rose.
Kicking off with the Fed. I mean, you talked about it last time you were here. 25 basis points. It's happened. So what next? Do we possibly see another one in September?
I think what we see going forward will be largely data dependent, and that was what Jerome Powell tried to frame yesterday. The fight against inflation has been a long one, and there's been some significant progress that's been made. I mean, from the peak of about 9.1% in June last year to about 3% that we saw in June of this year. So that's it's been very strong. Again, you didn't expect anything short of that because the monetary tightening has been very, very aggressive. The most aggressive we've seen in about 40 years. And that rate hike yesterday essentially took, the rates, its highest in about 22 years. So I think that what we see going forward will be largely dependent on the inflation data that we see. Also, how resilient the labor market remains will also be a critical data point that determines what the Fed does going forward. I mean, they still have about 3 meetings before the year runs out, so you really can't rule out any further hikes. But what we saw yesterday was largely in line with expectations. So what we see going forward will be very much data dependent.
Some have said that the Fed has been behind the curve, and part of the reason why they're so aggressive was because they're trying to catch up. With inflation, as you've mentioned, coming from that peak of 9% to 3%, would you say, has the battle been won yet against inflation in the US?
We can't say that the battle is over, really. Recall that the target for the Fed is 2%. We're still about 100 basis points off of that. Again, it's important that they put their foot on the pedal to ensure that we don't get any resurgence in inflation, right? The labor market remains really tight, right? And that could be an ember for inflation to come back again. So it's important that the Fed, stays focused, stays the course, and that is what it is doing. Yes, it was behind the curve because we saw the transitory narrative go on for about a year or so. March of last year, the Fed was still essentially pumping money into the economy, and that's the reason it has been as aggressive as it has been. It essentially needed to be that aggressive to basically knock inflation off of its perch. So we've seen great progress there. Really going forward, it would be what happens with the data. I think the Fed realizes that it was behind the curve at some point, wants to ensure that it stays ahead this time around. However, in doing that, to also ensure that they don't break something, right?
Right.
Engineer a soft landing really is the mandate for the Fed right now.
Okay, speaking of which, excellent. On that point you just ended on, the soft landing, Powell downplayed the chances of a recession in the US, and a number of analysts seem to be picking up that narrative. What do you think? Think they'll avoid it?
No, I think they are likely to. I mean, coming into this year, the scenario was obviously very different, right? The expectation was that we would see a slowdown. Globally, we would see a slowdown and some kind of mild recession in the US. But I think the narrative is shifting a bit now. And all of that really is down to the resilience of the labor market. The labor market has remained very, very resilient. Over the last 1 year, except for if you look at the last 2 months where things have kind of slowed down, that economy has churned out an average of 500,000 jobs on a monthly basis. So that is really, really strong. And the economy really is almost 70% consumer spending. So if you have an economy where the labor market is really tight, which means that people will continue to spend, it's really difficult for a recession to happen. Yeah, worst case, you might have a slowdown, but I think that from where things are at, particularly because inflation again has reduced quite significantly, they are likely to skirt a recession.
Great stuff. Let's move across the pond to Europe. We're expecting the ECB to also hike as well. How do you see things turning out there?
Well, it's all really expected that we'll see a 25 basis points hike later today, which would essentially be its ninth consecutive hike. The ECB has pretty much been slightly behind the Fed in that inflation fight. Also, if you look at the inflation in the Eurozone, it's much higher than what you have in the US. It's come off a bit, but there's still some way to go to bring it down to that 2% target. I mean, the expectation is that we probably don't get to 2% until later in 24, maybe in 25. So there's still room for the ECB to continue to tighten. However, you've got to juxtapose that with the economy, right? As they continue to tighten, the tendency that credit conditions get gets significantly tighter and, something breaks in the economy, becomes a real challenge that, the ECB has to deal with. Nevertheless, the labor market in the ECB also is quite tight. Certainly not as tight as what you've got in the US, but it is quite tight. So
if just the whole Eurozone narrative, if you look at, you mentioned inflation. So Spain is, I think as of June, 1.6%, the lowest of at least compared to France, Italy, and even the whole Eurozone. If you're Spain and you're looking at all these rate hikes, how do you feel? And what does that say about being part of this bloc, this economic bloc?
It's part of the sacrifices that they have to bear, really, because at the end of the day, you want to look at the benefits of belonging to that bloc and looking at the cons of that, right? The truth of the matter is that, as a matter of fact, last year when the ECB decided that it needed to start, hiking rates aggressively, the concern was there, particularly about the Southern European countries, right? As these rates go higher, their bond yields tend to reprice higher. What that then does is that it essentially kind of shuts those Southern European countries out of the international capital market where they're unable to raise funds, right? But I think what the ECB has done is to create some kind of segmentation that allows their yields to not significantly increase as they hike rates, such that they still have access to the international capital market. So I think that is something that the ECB has done quite well to manage, to ensure that we don't create a bifurcation where Southern European countries are effectively locked out of the international capital market, or they begin to feel very significant fiscal strains.
Great stuff. Let's hop again across the pond to Asia now. Samsung, what do you make of that massive drop in operating profits for the Samsung Electronics?
Right. I think it's just on the back of the weakening demand in consumer electronics, really, that we're seeing. And it's not just Samsung, right? We've seen that with a couple of, consumer electronics companies, really. The demand has really dropped off this year. I mean, about 2 years ago, we had a chip shortage, right? And then we saw, production was significantly ramped up. However, if you look at the inflation that we're having globally, you're looking at, demand constraints here and there, that has created a drop-off in demand. As a matter of fact, the estimate is that, the demand for consumer electronics will drop about 2.3% this year.
Wow.
We expect to see some recovery towards the end of the year, and that should bode well for Samsung Electronics and, other consumer electronic players. Again, Samsung is a major producer of, dynamic chips, which is one of the hardest hits with this slump in demand. So I think it's just some kind of, cyclical movements in demand, really, that's impacting what we're seeing with Samsung.
Great stuff. Still on tech, this deal between Volkswagen and Xpeng, stock just skyrocketing over on the Hong Kong exchange with this news that they want to, produce. Is this part of this EV narrative? How do you see this development?
Absolutely, it is. I mean, China has the largest EV market in the world, so anybody that's getting in there, partnering with local guys, certainly is going to get a piece of that pie. And the focus really is for the middle market, where there's still quite, grounds to be covered. So and that's the reason, it seems possible. Again, part of that, acquisition is to ensure that, there is some backward integration that, creates optimization along the supply chains for them. So it's a really good one for them in the largest EV markets in the world.
Great stuff. Still on technology. What do you make of this? Now, it's Nikkei, that the publication that's reporting this. They try to get statements from Huawei, but they didn't comment. But they're reporting that Huawei is looking at 5G chips, producing them later on this year. I mean, with everything that Huawei has gone through, what do you make of that news there?
It would basically have to be a local collaboration, right? Because policies from Washington have ensured that Huawei doesn't have access to these things, particularly in collaborating with foreign companies, particularly from the West. Only recently, the Netherlands had also slammed some sanctions on Huawei, further limiting their ability to lay their hands on these high-tech chips. So Huawei has to have a local collaboration. And really, China has to kind of build locally to ensure that it gets itself out of this, debacle where, it's been significantly bogged down when it comes to the 5G race and the manufacture of high-tech chips. So it has to be a local collaboration. It makes sense that Huawei certainly wants to do something to get its way out of this. That really is the only way to go at this point.
Well, how doesn't that still fit into the whole US-China tensions?
Absolutely, yeah. Absolutely. So the US-China tension is on a number of fronts. So geopolitically, technology, the might of the economy, military might, skirmishes in the South China Sea, and dominance, search for dominance in the entire Asia Pacific. It's all of it. It's the entire gamut of it, really. And when it comes to geopolitics over the next couple of years, that is something to watch out for, the tensions or the scramble between the US and China on a number of fronts. That is something to really keep an eye on.
You know, and I have to add this in here. How are you seeing things for the rest of this year? Because there's this coup that's happened in Niger. You've got this US-China issues and what is it now? Russia-Ukraine. Very quickly, those are still headwinds as far as global investment is concerned.
Absolutely. I mean, only last week or 2 weeks ago, Russia pulled out of that grain deal. The counteroffensive by Ukraine isn't getting off the ground the way we expect, but we think that the West will continue to supply weapons to Ukraine. We've also seen developments around the fact that Finland's been admitted into NATO, so that border between Russia and NATO is going to continue to expand. Sweden is going to be admitted soon. So a lot of issues on the geopolitical front that one has to keep an eye on, really, that have potentials to turn things around in the global economy.
All right, finally, Meta, is Mark Zuckerberg back with his second quarter earnings from Meta? What do you think?
Well, I think the result is just a reflection of a resurgence in digital ad marketing revenue. However, if you also look across, you're seeing an increase in all of its metrics. Daily average users essentially went up to about 2.06 billion from 2.04. Daily monthly users went from about 3 billion to about 3.03 billion. While also, if you look at the average revenue per user, went up to about $10.22 from $10.16. So that resurgence in digital ad revenue, is something that is really playing, really well for Meta. However, going forward, you need to understand how volatile those digital ad revenues are, such that we've seen, those ad spend move from one platform to another. Right today, you're seeing Meta, you're seeing YouTube. However, you have the likes of TikTok that are coming as well. ByteDance, is a strong player in that area. So Meta has to figure out a way to ensure that those ad dollars remain on its platform. That might be a difficult thing to do in the long term.
Efosa Aluyi, Head of Investment at Sankore Global Investment. Always a pleasure having you, man. Thank you so much for joining us, taking us through the headlines.